Gold is at an all-time high. What is going on? Following last year's strong performance of up over 14%, gold continues to move higher, breaking above $2,150 an ounce. There are lots of reasons to believe this trend will continue. This is Coins Roc. Stay tuned as I explain. One of the main drivers of gold prices is tied with interest rates, and while no one knows when the Federal Reserve will start cutting interest rates, it is widely expected that rate cuts will likely begin in June, with more to follow. Interest rate cuts weaken the dollar, and gold and the dollar move in opposite directions. A second factor is the recent strong performance of both the stock market and Bitcoin. As the stock market indexes reach record highs, some investors may be looking to lock in some of their gains. When money comes out of stocks, it must go somewhere, and it's reasonable to assume that some will move into other investments, such as gold. The same is true for Bitcoin, which is also at an all-time high, causing some to lock in some of their gains. Investors in Bitcoin are attracted to alternative investments, and gold certainly qualifies as an alternative investment as a place to put some of their proceeds. Demand for gold also continues to be strong. The past 2 years, central banks around the world purchased over 1,000 tons of gold, the largest since 1968. Turkey, India, France, Germany, Italy, and the US have all been strong buyers. Purchases by individual investors globally are at all-time highs as well. You can now buy gold bars as Costco, and they sold over $100 million worth last quarter. Even Walmart is getting into the gold business, and television is full of ads these days for selling gold. Meanwhile, new production from mines continues to slowly decline. Worldwide production peaked at 3,300 tons in 2019 and has since fallen below 3,000 tons. While the wars in Ukraine and the Middle East are no longer front-page news every day, they are still ongoing and have the potential to expand into wider conflicts. Gold is often used as a safe haven hedge against geopolitical uncertainty. Another major issue that is not front-page news every day but should be is the federal deficit, which has passed $34 trillion. Every few months, another $1 trillion is added. At some point, the deficit has to be dealt with, and there are no easy answers. Most scenarios for dealing with the debt involve a weakened US dollar, which would be bullish for gold. According to the World Gold Council, demand for gold last year for jewelry accounted for almost half the demand for gold, led by China, India, and the US. Another 8% was for technology and industrial usage, and this category is growing. Both of these uses are supported by strong economies. All in all, there are many reasons to be bullish about the price of gold moving forward and little reason to be pessimistic. I can't say the same for silver, which declined in value last year and has continued to decline so far in 2024. In a previous video, I addressed my case for not buying silver at this time. Gold is attracting a lot of new fans these days. JP Morgan has forecast $2,300 gold for 2025. Citibank calls for $2,300 gold in the second half of this year, with a wild card call for $3,000 in the next 12 to 18 months. Remember, these are predictions, not a guarantee. Also, this is not investment advice, it's just my opinion. Thanks for watching. If you found this helpful, please subscribe, like, and comment.